of 600 seconds of trading. My name is Alejandro Zambrano, Chief Market Analyst with Trade Captain and Amana Capital. It's 9:05 a.m. in London, where I'm based near St. Paul's Cathedral in the city of London. And I'm going to provide you guys with a quick update on the Euro-Dollar, Bitcoin, Gold, Crude Oil, and the DAX 30. Of course, if you're new to this, maybe you're watching this on YouTube, please bear in mind that we do this presentation every Monday to Friday at 9 a.m. London time here at the live trading room on tradecaptain.com. We have Essam in the chat box. Good morning to you, sir. I hope you're doing well this morning. And as well, if you guys want to join in the chat box, just sign in with your YouTube account, and that's going to allow you guys to ask questions, interact, and as well, it's going to allow you guys to hit that like button, which is down here. Please, if you like the presentation, do click on it because it does help. Let's begin, and we'll take a look. We'll take a look at something different today. We're all gonna take a look at the markets that we usually do, but we're gonna begin with the dollar index. So this is the dollar index, and it's a daily chart, and you can see how the price is trading size between the June low and the June high. We did have a very nice rally here in the dollar index for a move to the upside, and here it looks like it needs a bit of a break. And I don't want to be a carrier of bad news, but I suspect the dollar index could continue to trade sideways for longer, and that means that the euro dollar, the pound, maybe even the dollar yen could trade sideways for longer. So with this in mind, if we take out the high, then yes, probably head to the upside, which again seems fair anyway because of the macro fundamental picture. On the other hand, if we trade below support here, we could probably have a bit of a decline really, and the market could trade a little bit lower. And this is interesting because this suggests to me that you should probably be a bit careful with positioning in dollar pairs in general, because you could have a bit of a sideways markets. But of course, there's like hundreds, well not hundreds, but 50 up to 100 different other pairs and markets to trade. So you just need to go through all the different markets. That's the way I do it usually, to find something that is interesting to trade. Now here's the euro versus the dollar, and the market is close to its high up here, and this is the trend defining level at 1853. And if you look at it from a big picture perspective, and if you have a long-term outlook, then the market is bearish below this level, and the market could potentially move to the downside. And I've been saying this for quite some time. And as long as trade below this level, there's no real reason to change our bias. In the short term, of course, this market has a bit of a bullish bias without a doubt, but I would not trade that. The market is trading sideways between this high and this low, and it's gonna be choppy for quite some time. One way could be, sell up here, and then, maybe a week later we'll be at the lows. We could also be stopped out. So to sort of get rid of that randomness, how can we do that? Well, one way would be just to work with a break with the June low. Take out the low, I think the market will head lower. This is the price of Bitcoin, and Bitcoin is back under pressure. It looked like it wanted to trade higher, and I think it did slightly push above the trend defining level, but then the market quickly gave up. There's not too much we can do about this when it happens, and the best strategy is just to sort of remain bearish for now. And the market's moving down. Maybe it's still creating a head and shoulders, short-term head and shoulders, that is. Head, left, maybe right shoulder, and take out the high. So the analysis I shared with you guys is still intact. It still makes sense. But for now, I'd rather be bearish than bullish. And here is price of gold. So gold moved up a bit, after such a strong decline. And remember, we're bearish targeting this low. You had a reaction. The market moved up and then down. And I think if we just try to think of it from a sort of risk reward ratio perspective, if we sell here and we go down to the low, we'll make $14. At the same time, where are we going to put our stop loss? Well, we could put it just above the high, which means that we have a $13 risk. But this high seen here a few days ago is not really strong. So I think the big picture or the major high is $54 away. So from that perspective, the risk-reward ratio is telling us don't sell at these levels. In fact, probably look to get involved and look to buy. So I'm going to maintain a bit of a bullish bias. I think this market could head slightly up like this. Very risky though, but it is possible to buy here as we talked over the last 2 days on this corrective move. What I did today is I just put some fibs on top of it, so we can see you bounce from the 61.8% correction level, and it is possible to buy with a stop here. But personally, I'm just gonna wait for that break to the downside here. I'm not gonna trade that corrective move. Here's crude oil, and you know what? It's a bit boring right now, but this is good. Boring is good. Why? Because hopefully when we break either the upper end or the lower end of this move, we'll have a nice, decent little push. And the range is $3.22. So if we break the upside, we can go up to 78.53. If we break the downside, we might potentially move down at least to well, I can't say at least, because this financial markets is a little bit like the weather. You don't really know exactly. Of course, it depends on where you are in the world, right? But if you're in England, it's difficult. But if you are in other parts of the world where they have one season, then of course it's much easier. But the weather in London, if you know about it, is difficult. So with that in mind, it can go down, and I can't guarantee it's going to go down all the way to the low here, but I think maybe up down to the high. I think that would be fair. German DAX is moving lower. It's testing that breakout. It's a difficult market to deal with. If you check out the live technical analysis section down here, just click on it. Actually, you'll find several updates that I posted and Nathan has posted. I do like the S&P 500 when and if we take out that June high. As well, if you read my dollar-yen update, you know that the market pushed to the upside, but the reason for DAX being lower today and many other financial markets is because a new tweet from Donald Trump, where they're going to put tariffs, could potentially put tariffs on about 200 billion Chinese data. So it's not Chinese data, Chinese goods, and that is causing disturbance in the markets again. And obviously, at one point, all of this is going to come clear. At one point, if this continues, we will have maybe a bit of a global slowdown. We might have stock markets moving down, like the Chinese markets. At one point, I think it was down about 20% or so. And you'll have that, and you have that strong sell-off, and maybe we'll have the same in the S&P and things like that. And it could happen. We are about to reach October, August, which tends to be bad months for stocks, and that will happen. And how can we prepare for that? Well, there are different tactics. You can buy options. That's what people do. They buy puts. Like 6 months from now, the market is going to be lower. The issue with puts, though, and options in general, is that I traded options myself, and the risk-reward ratios with options is not that great, unless, of course, you get it really, really right. So I don't really think it's easier. In fact, it's so costly to get involved in options that it sort of kills the risk-reward ratio quite a lot. But I think what we can do, maybe here in this presentation, and many other sort of people that just trade spot as we do here, we just need to sort of get ready for and look for breaks and big levels. For example, here's the German stock market, and the German stock market is bullish above these lows. So if we take out 11,707, then yeah, okay, that's going to be bad. There's a ton of these, like the S&P is bullish, the NASDAQ is bullish, so I don't think we should get too worried about it yet. But if, for example, the NASDAQ indeed trades below something which is like its June low, then yeah, we'll probably head lower. Now, we should be clever when we invest. It's not always the best to sort of trade something like it's an uptrend. So, for example, you have the US 30, which is more sort of in some sort of triangle. This is not going to be easy, but there's other things. For example, remember this one? This is the Italian stock market. Under pressure, the market bounced and continues to bounce from the levels I shared with you guys. But if we trade below the June, so the low here from 2008, then yeah, we'll probably see lower moves. This is the Hong Kong stock market, which I actually had a bearish view on. Probably too late to short this now, but there's another one here. Let's see if I can find it. This is the Canadian stock market, if I'm correct. But there is one, and I'm looking for, it's called, yeah, I think it's this one. This is the Taiwan stock market. And the Taiwan stock market has a very interesting pattern. And this is a nice big range. And it's a range of about a range of about 9.81%. And if we take out the lows here, it could be really bearish. If you don't have access to markets like that, then you have other pairs. I think I shared this with you guys in the past, but this is the Australian dollar versus the Japanese yen. Could be a good option. Also trading in a nice range like this, and break to the downside here could potentially open up for another move. Other things as well that I shared with you guys here, and I also share with the guys in the chat box, is copper. I traded some of that, got a bit of profit. Of course I should have kept it for longer, but this is copper. We had this nice range. I shorted here for a push to the downside, and the market just continues to go down. So there's opportunities to trade this trade war, and we need to be clever and not just get stuck on your euro dollar, or your pound dollar, your dollar yen. You need to be clever and go through many different markets, and especially in Forex, you will find setups. For example, Australian dollar is sensitive to what's going on in copper. The yen is sensitive and tends to gain on the back of bad news. The dollar, that's a theme that could be traded on the back of interest rates. And then the euro, I guess, a little bit more difficult to sort of put in place. And that's it. Let's see if we have any questions. So we have, hi here, good morning to you, sir. I hope you're doing well. And then there's a question here. Please, I want to know dollar CAD. And then I'm not sure if the Australian stock market has made a bottom. Oliveri, good morning to you. And Jacob as well. It says, could you please briefly analyze on S&P? Okay, so we have a question on the S&P, we have a question on the Aussie stock market, and then we have a question about the dollar CAD. So the dollar CAD is going to be in focus today, we know that. So this is my view, and a view I had for quite some time. The market tumbled to the downside, and I've been suggesting that the market should look to bottom out here. I think probably the best option is on the back, because I think the rate meeting is up today. I don't really anticipate anything major, but if we take out this level, which is 131.65, then that would conclude that this correction is probably going to be over. So take out this high, and this market could probably push up like this. So that's something you want to keep an eye on. 131.65, bullish on a break to the upside, okay? If not, if you just want to stick with the long-term trend and sort of just go with the flow, then this is the level to buy here. About the Aussie stock market, yes, it had a big tumble yesterday, and well, actually today. So this is the Aussie stock market, and the market had a break here, and then tumbled, and then it's now continuing to move to the downside. The way the US stock markets are looking, we might have a little bit more of a push to the downside, and there's not too much we can do about it, actually. This breakout here, to some extent, has been invalidated as we traded below this low. But if you look at it from a strict sort of long-term trend following perspective, then as long as you trade above 61.85, which is this low here from July 4th, then it should be fine. This should be just a move to the upside, and shouldn't be a big issue. About the S&P in general, I think here as well, you know, my preference is a break to the July high. We moved above it yesterday, but I didn't trade that. Instead, I traded a bit of dollar yen. I got rid of the dollar yen position this morning for a loss of about 20 pip or so. Here, if we take out the high, I think it's going to open to the upside. If not, if the S&P here, if it goes down, you can take a fib from the low to the high. It's either going to go maybe just down a little bit, if not 50%, and then I think it's going to try to bottom out. But my preference is just a break to the upside. Okay guys, don't forget to follow me on Twitter. My Twitter is AlexFX00. On Twitter I share setups and articles and things I like and I think it can be interesting. Make sure you follow me, so AlexFX00 as well. If you have any questions, you're most welcome to just send me a direct message via Twitter. If you want to reach me on Trade Captain, you can always email me if you like that at asambrano, so asambrano@tradecaptain.com. As well, we have many different sections here that might interest you. We have the premium section that offers you some more education. This is the way it looks like. You have top trading chart patterns. We have cryptocurrency trade ideas, different videos here, some scalps strategies. We have trade signals as well from Trading Central and close-in on order charts and the close-in horns. So you have that as well here, and special reports. We're not that too much on special reports right now, but you have that. You have webinars as well. We completed one yesterday. We're gonna upload the list in the next day or two with more events coming up. And then you have the advanced Forex ebook. So if you are sort of new to Forex, have less than 1 year of experience, then this could be interesting to check out. I didn't write it myself, but it gives you an introduction to Forex trading in general. And I do think as well has a few strategies. Actually, Claus and Horns has, I think, 4 or 5 different strategies that they share, and quite a bit of educational content. Let's see if I can show you. So this is the sort of, they use Elliott waves and some more of technical macro fundamental news here. Then you have education. So you have trading strategies, and these are the different trading strategies. They're not sort of, I don't think you're gonna make a lot of necessarily like they're good to go like that, but it sort of gives you an indication at least how you can build a strategy based on indicators. And who knows, maybe you can learn from here, combine and create new things. They have quite an ample, actually there's a lot of them. There's a ton of them here, yeah. I think it's more than 20. Yeah, so they even have video courses. Buyers Forex, why trade Forex, currency pairs. So there's a lot of content here, and they even have an ebook. It's more than I knew. How big is this ebook? There's some serious book here. 45 pages. Okay, that's it. To access all of the sections, you just need an Amana Capital account. It doesn't matter how much money you have, small or big. There's no minimum. It sort of depends on how much money you want to make when you trade and how much you're willing to risk. If you just sign up, then you can only have access to the webinars. But if you download a demo account, then with the same email, then you can access the premium education. Forex ebook, trade signals, they're part of if you're a real account holder. Also something really interesting, I don't know if you picked this up, but we have this program called Delta Trader, and it's a nice little perk that you have. So people that trade with Amana Capital, they can enroll in the Delta Trader program, and it doesn't cost a thing. When you log in, you will have access to a dashboard, and this dashboard keeps track of your average win to loss, your average profitability ratio, like how often you make or lose money, and also keep tracks of your profit factor. And what's interesting here is that if you are profitable and if you reach certain criteria, then you can actually manage up to 100,000. That money is coming from a company called 514 Capital, which is a hedge fund that is owned by the same company or same owners that own Amana Capital. Now, this hedge fund has several millions of dollars. So what they have done, they allocated about 1 million to this project because they're looking for traders that are good at trading. So in essence, you trade with Amana, you can trade Forex, commodities, even cryptocurrencies. And if you trade well and you have a profit factor of at least 1.5, your average profitable 45% of the time, and your average win to loss ratio is slightly higher than, I think, 1.5. So that's very easy to reach. And percentage winnings as well is very easy to reach. Profit factor just comes, if you trade well, you just have it there. So it's not that difficult to necessarily reach these targets. And we already have 2 guys, the way it looks like right now, they're gonna be able to have $100,000 account each. Now you might ask, why do I care about $100,000 account? Well, because if you trade and you do 20% in a quarter, well, that's 20,000, right? So 20,000 profit. Out of those 20,000 profit, you keep 20%. That's $4,000 that you keep. And imagine you have an account with maybe $5,000 and you do 20%. Well, that's $1,000 profit. So you'll keep that because it's your own money, right? So you keep that and you just made 1,000. That's awesome. But here you're trading with somebody else's money and you keep the profit. So what's better? Trade with, make 1,000 in profit or make 4,000 in profit? Obviously 4,000. So, and this is with a 5K account. If you have an account with $1,000 and you make 20%, well then you make $200. So again, 4,000 versus 200, what's better? So it's a nice little program, and I think it's also interesting from the following perspective. Like a lot of people with small accounts, they trade with a lot of leverage. When I was at another broker, we did some analysis, and people with, I think, less than $1,000 or so, they would trade with about 26 times leverage. And because they would trade with 26 times leverage, very few of them would be profitable. In fact, the majority would lose money. However, though, if they traded, or the traders with that broker, they traded with just 5 times leverage, about 40% of them would be profitable. Whereas I think people that traded with more than 26 times leverage, the likelihood of being profitable was in I think maybe 10% or something like that. So, and I think the reason why this is the case is, of course, because when you trade with a lot of leverage, a small market move will get you wiped out. And the question, and the underlying question is, why do people trade with so much leverage to begin with? Well, because they don't have too much money on their accounts. So obviously they put 1,000, 2,000, and they want to make 4,000 or 5,000. That's sort of human nature, because nobody's gonna work really hard for 3 months just to make $200. Some people might, of course, but if you're based in Europe, and I guess maybe the US, you wouldn't work really hard and get involved in trading just to make $200, unless it's part of a bigger scheme that you're planning. So this sort of alleviates the pressure. So if you're a good trader, you trade with 100,000, and when you trade with 100,000, there's no need to be trading with high leverage and be reckless. So it's a nice little thing here. And on a final note, I did some analysis on people that signed up here, and across all of the people that are actually trading in the program, because obviously you always have people that sign up but they never start trading, but the people that are trading, about 41% of them are profitable. Maybe it's because you have more people that generally think they're going to make this, so they're good traders, But I think it's more to that. I think the fact is that in the dashboard, you can see some of your metrics, and we do offer some simple little tip within the dashboard. And I think people are sort of realizing that people that are in the program, in essence, are more aware of the risks involved and trade accordingly. So about 41% of traders that are in here right now are profitable, where I would say the average trader probably doesn't have that, and it's probably, I don't know, I wouldn't guess because I don't really know exactly, but maybe half of it, 20% of traders are profitable, if not lower. So that's another interesting thing with this. To sign up, you trade with an MT4 or an MT5 account. Just need to have an account. Amana is FCA regulated, and you just sign up. It's very straightforward. You trade. If you don't, you trade your account like you would trade with any other broker, to be honest. And then you can check out the system. And if you trade good, you might get those 100,000. If you don't trade good, then there's not gonna be any difference here compared with trading with any other broker, except you have that dashboard, and you be more aware of your risks and potentially put yourself in a better position to make profit. Okay. All right, so we're gonna wrap things up. I didn't have any more questions. If you have any questions about me and my own trading, send me a message via Twitter or email me at asambrano@tradecaptain.com. As well, if you have any other questions about the website or anything else about trading, then you're most welcome to use those channels as well. Thank you very much, and I'll see you guys tomorrow at 9 a.m. London time. Thank you.